Back. So tonight we're live with a debate. We call it exchange rate politics. It appears the exchange rate is now the most talked about economic indicator. Indeed, the former vice president made it a big issue because he said in the past that when the fundamentals are weak, the exchange rate will expose you. So it's a big topic. And as we speak, the Ghana Cedi is selling, if you check Google Finance, 11.89 to the dollar. The BOG itself, as of yesterday, was around 12.1 Cedi to the dollar, and it keeps moving. Bloomberg is also looking at 11.9. The Cedi has appreciated year to date to the US dollar 18.8%, 18.8 strengthening against the dollar. So that's very strong. If you look at the chart behind me, it's quite clear that the Cedi is beating all records. The other interesting thing is that the Cedi's performance seems to align with inflation. So if I show you an inflation chart, you would also notice that inflation is trending downwards from upwards of 54% in 2022, a mini peak of 23.8 end of year is now 21.2. It's at its lowest in 8 months. So inflation is trending down. So somehow the Cedi strengthening is also bringing inflation down, which is really good. Interest rates are also coming down. I won't show you those charts, but we know that for example, the T-bill rate is very low, and it's actually much lower than even the policy rate. As I speak to you, the 3-day policy meeting of the MPC is happening. So they'll be discussing all of this. I'm sure at break they'll be watching this debate because they would like to hear from 2 of my guests. In fact, all 3 guests. Very interesting. Now, what has triggered this debate is not that we are not happy that the Cedi is appreciating. The Vice President has taken part of his visits to the UK. I believe he was at Cambridge and other places. And he made a very interesting statement that has set the cat among the pigeons within the political party. So here's Dr. Bawumia speaking in the UK on his views about the currency's appreciation.
The appreciation of the Cedi that we have seen recently. I think one of the things that if you ask a simple question to the NDC to point out exactly what policy they have implemented that has resulted in the appreciation of the Cedi, they cannot tell you one that has been implemented, not sort of talked about, but actually implemented. They cannot tell you one such policy. They only passed their budget in March. They've not even issued any contracts and paid for anything, pretty much. So you cannot ascribe what is happening to the currency to a policy that they have implemented. There's no such policy that has been implemented that has had that impact yet. For me, we had anticipated the impact of gold in this economy. I talked about it when we got into dire straits in 2022. Bank of Ghana had bought $5 billion worth of gold. After all the noise of the election, people are paying attention to our reserves. That is one thing, which we have built to 30 tons. Secondly, you've mentioned that the US dollar itself is on the decline globally. And that has also strengthened. If you go to Zambia, for example, the kwacha has gained a lot of ground also because you have the US dollar declining in value because of what is happening in the US with all of that. So I think those are, and then there's the third element is that they are not spending. I mean, if you are managing an economy, you have to pay your bills. They are not paying IPPs, for example. This is why the doomsday is so acute, and they are not paying contractors. So when you are not spending, there's less pressure on your currency. So those are some of the reasons why you are seeing an appreciation of the currency.
So that was the former Vice President, Dr. Mahmoud Bawumia. The President has also been speaking about this, and he's obviously, you wouldn't say he was directly responding, but quite clearly it's in the same frame of thought. So here's President Mahama explaining why the cedi has been doing well recently.
Which depreciated by 19.2% in 2024, has shown signs of recovery, appreciating by 3.9% against the US dollar by the end of April 2025. Our gross international reserves have improved further from $8.98 billion in December 2024 to $10.6 billion by April 2025. This is equivalent to almost 5 months of import cover.
We'll bring you a longer video later on. My guests are in studio. I have Dr. Tia Abdul Kabiru Al-Hassan. He's MP for Wale Wale, which is essentially the constituency of Dr. Bawumia. And he's also, I don't know how to call him, an economic advisor to the former vice president, or a former economic advisor to the former vice president. So you clarify. So are you the former economic advisor to him while he was in office?
Yeah, so I was the advisor to the former vice president once he was in office. Yeah.
So now you are MP for Wale Wale. You can't combine the two positions.
That's right. I can combine the two, but except to say that I'm not appointed as
okay. Has he appointed his team yet?
Yeah, I think he has gotten, some people were supposed to be submitted to the office of the president as his aides, just in line with the demo. So some staff haven't submitted.
But ordinarily, a sitting MP may not have the time to do that.
Ordinarily, but you remember Gideon Boako is in Parliament, he's still supporting the vice president.
So he's still with him in London?
He's still with him in London, so...
So Gideon was a spokesperson and you were his economic...
Technical economic advisor.
Technical economic advisor. Yeah. All right. Thanks for joining us. I'll let you greet Wale Wale people later. Yeah. We also have Professor Sharif Khalid Mahmoud Khalid, who is the economic policy advisor to the current vice president, correct?
Yeah.
So basically the job he was doing, you're doing it now.
Kind of.
That's interesting. But you are not in parliament.
I'm not in
parliament.
And
when you were doing it, you were not in parliament.
Oh, yeah, so okay. Maybe he's going to go to parliament.
So maybe the job is too difficult to do with parliament.
Well, I don't know. Can you combine them?
Well, you can combine.
Are you seeking
to? The truth is that you cannot be serving as a current, you are more or less Article 71 office holder as an economic advisor to the president or vice president. And if you are going to be in parliament, that is another
too many things.
So you cannot, the workload, you cannot do two, it will not be prudent to be employed by the same, drawing from the same consolidated fund for the purpose. So
meanwhile, you're doing double work.
Double work. So
for single pay.
Yeah, that cannot happen. I just.
So yeah, so it's better he should just concentrate on this job.
Wear one cap. I mean,
all right. We'll be joined. We'll be joined by Professor Godfrey Bokwing, who is an interesting guy because I knew him from the university. Started as so it's both like a finance and economics guy at the same time, right? So he's an economist and professor of finance. All right, so I think do you tilt towards more finance or economics?
I'm more economics.
You are more economics and you are more finance.
Yeah. Accounting and finance.
Oh, that's an interesting. So Bokwin is the combination. Why on earth is the former vice president talking about this at this time? Some will say it's too early. We haven't seen the full length of the snake. Yeah. Why is he even, as they say in Ghana, putting his mouth in this business this early?
Yeah, so like you said, let me say good evening to your cherished viewers and to the people of Wale Wale. Again, it's always an opportunity to serve them. So whenever we have this opportunity, we'll want to express our gratitude to them. The vice president, as part of his tour, he went to the IDU and then went to Cambridge, where he was also meeting some Ghanaian community and then party supporters. He expressed view on the region topic, and you all agree that over the last 2 weeks, the topical issue within the shores and for us as a country, good news, but because of also the politics of sometimes the results, where the vice president used the opportunity to comment on the development in the country. And the development was to the fact that we are experiencing an appreciation of our currency in contrast extension to the United States dollar, which is more or less a vehicle currency or the currency which we trade with. Now, the vice president's view was to the fact that if you ask the government as to one single policy they have done, you find them wanting for answers in the sense that they can clearly say that this was not within the economic spheres, but we introduced it, and that is what is leading to the result. Because, you see, we've been lamenting about the structure of the Ghanaian economy, to the effect that if something radical and significant so is not done about the nature of our economy, we will continue to have this perennial depreciation of our currency. So within that context, the Vice President stated that, well, we are having an appreciation of our Cedi, but that result we are seeing cannot just be the factor of this particular government putting in place. Because you recall that just in March, when they were presenting the State of the Nation, and I remember I debated the same thing with my brother on this same platform, to the effect that the economic fundamentals were not that bad. We argued same, and we made our point clearly that, look, the foundation that was laid, even though we're coming from a crisis where the economy was virtually in the abyss, we are now moving away, and then the economy was in a good footing. And so, therefore, our position was much better for this current government to manage. But they argue strongly that the economy was criminally mismanaged and that there was nothing we have to brace for, a difficult road. So, all this in context, the Vice President made a point that, one, the reason why, and let me make this point, look, is we will understand that, and you also understand that correlation does not necessarily mean causation. It is quite established in econometrics, and even if you lead criminal law, those to the causal relationship, they will tell you that the factors that are causing an event may not be those that we are seeing. In all this discussion, no single person has been able to run a causal relationship between the macroeconomic fundamentals and the movement of the exchange rate. We are all assuming that the determinants of the exchange rate, i.e. demand and supply, and demand is influenced by certain factors, i.e. availability of the currency, 2, expectation, 3, the relative price of goods and services in other countries. So all these determinants, we can all put them there and discuss that. But so far, everyone is picking and choosing as to the possible causes of the appreciation of the Ghanaian cedi. But we all know that, try learning that you cannot have supply of dollar be more than the demand, and then the price of the dollar will not come down. That is quite trial learning. So one of the factors that are resulted that we can all agree on is the foreign reserves, because that shows the supply of hard currency within the domestic economy. Now, how do we account for this current, i.e. over 10 billion of reserves? You have to look at the trajectory. How much of this amount was added by the new patriotic government, and how much of it is being added by the current government? If you realize that over 80% or about 80% of the foreign reserves were added or were accumulated by the previous government, and only some 20% is added by the, you cannot say that the availability of forex within the local economy that is contributing to the depreciation of the United States dollar against the Ghanaian cedi is by the NDC, because the NDPP contributed 80% of that availability, and that availability determines the prices of dollar to the cedi. That is one reason. 2, we then look at expectation. How is expectation formed? Because you see, we have not been able to model again expectation to know how much expectation is feeding into this whole dynamic of exchange rate depreciation or appreciation. But we do know that expectation is an anchor of, 1, availability. If people are aware that we have forex available and we will get it as and when we demand it, they are going to have good perception of the outlook. 2, if they realize the government is consolidating its fiscal policy, it can also signal expectation. If there is also this particular sense that, well, in the coming days, trade in the United States, for instance, the economy that is holding the dollar is the United States economy. Now, if business there is not doing well, there's no appetite for them to hold the United States dollar. So they will move into other currency. So that is another reason. And the Vice President, knowing very well that the MPP government contributed to the positive expectation or positive outlook of the cedi, would again say that, look, MPP government made this possible. The third reason that we need to note is that the Vice President had again noted that if government is not spending, unless of course the NDC is saying that decision not to spend is also a policy, right? If that is an argument, then we can all agree that then the Vice President was wrong to say that no single policy has been introduced. But I don't see the decision of government not to spend to be a policy, in a sense that in the 2025 budget, certain goods and services were budgeted for. Those goods were budgeted for in anticipation that within the fiscal year, government is going to spend on those. Like it or not, at the end of the fiscal year, depending on the availability of revenue, you are going to spend on that. if the budget was cutting down expenditure, it's one thing, because it will not even reflect in the budget. But once the budget contemplates those expenditure lines and put them in the budget, you must necessarily spend on them. Otherwise, the projection on your economic growth is going to be, crippled. Now, the government is deciding not to spend. Even statutory payments have not been done. Even if like compensation that are due certain members of parliament, Article 71 holders, have not been paid, then goods and services that were procured and the government projected and budgeted for same in the budget have not been paid. Now, even new contracts that were contemplated within the budget have not been awarded, talk less of being executed. Now, if you put that into the equilibrium, into the equation, you realize that the decision not to spend is contributing to the relative stability or depreciation of the United States dollar to the currency, because there is no pressure for people to then want to change either currency or local currency into the United States dollar. So that was another point. The last point the Vice President also noted was to the effect that, even on the line of payment, was the IPP projects. We are experiencing doomsday now, and the minister responsible for energy and green transition is complaining about the fact that we are going to have imminent collapse of agreement to the effect that Car Power, they are owing about $400 million, and that we are having to the tune of about $2 billion in the energy sector alone. Now, let's look at the accumulation of foreign reserves and the amount that is outstanding. The Gold Board reports that between January and then April, some 2.7 billion were accumulated and added to the gold, to the foreign reserves of our country. Now, energy payment alone is going to consume that. We're not even going to the over 500 million demand for crude oil that is supposed to come in. We're not even talking about other people who are going to China to trade. All those, if we put that into the picture, then you realize that if government begins to spend, then we will not have the same picture. Then the last thing was the fact that, look, all the time, people talk about externality or exogenous factor, and I know over the period, in your line of duty and you are host of this particular economic-related matter and financial matter, these exogenous factors have been explained, and people have used it to justify either their inefficiency or their efficiency. Now, how does the price of gold being a factor of government policy? Virtually, it's an external factor, that the fact that gold went as much as 3,800 at a point, or 3,400 per ounce at a point in time, it's not government policy, right? The fact that cocoa prices, as at the time that we were leaving power, was around 8,800. Now it went to mark $11,000, okay, to a ton. It's not government policy.
Okay.
All right.
You've said a lot of things. I want to summarize it first for want of time. Yeah. You're saying that correlation and causation are not necessarily the same thing. So the fact that in the MDC's governance, the currency is strengthening does not mean that they are the ones behind it. You're saying we can conclude that there's obviously more supply of dollars, which is what we can say. And then you are saying that because this supply of dollars is because of reserves. You're talking about gold reserves. Is that what you're saying? Then you said the government has refused to pay people, therefore they are not spending. So if not spending is a policy, then it's a policy. Yeah. But you don't see that as a major policy. Then you say, for example, that we owe IPPs over $2 billion, which is exactly the same amount or thereabouts that the Gold Board claims to have raised
in a quarter.
So it's very clear to you that if the government was paying the energy people, there wouldn't be that money to back the dollar. And then, what was your last point? External factors. All right, so about 5 points. Since it's a debate, let me give you the chance to respond. I've summarized the points he makes. What's your response?
Yeah, thank you for that. But that's quite interesting. To even bring in, I could see Kabiru panting through to explain all of this and raking in. I don't know what he started an LLB program. I don't know what criminal law had to do with what we're discussing in terms of correlations and causality. But to look at all of this, when you say IPPs were owed $2.5 billion and government needed to probably pay off these things, I think Dr. Bawumia and Kabiru are arguing on the length and breadth of the fact that the IPPs are meant to be made a bullet payment of $2.1 billion, which he knows and understands that never happens in any economy. You spread it over a long period of time, which could spread into 2-3 years even of payment with agreement with. So if we have this thinking within the focus of this debate, that is very faulty to start with. Now, I heard about.
So you are tackling the IPP first, that the payment is not supposed to be immediate.
It's not a bullet
the fact
payment.
That you owe 2 billion.
2 billion does not mean that 2 billion bullet payment should be made off to IPPs.
So that's your first one?
Yeah, that's my first one. Because if we want to contextualize that, that's a very faulty debate that has no basis to start with. He understands how government engages these and disperses these payments and the agreements. Management. They may even have to renegotiate contracts at some point whatsoever. Right. So to look at that figure in isolation, to say this, within a photographic year, which is just 2025, we read a budget. Again, when they talk about not spending, Bernard and the good listeners, the big ticket items for any government that has inherited this particular government to do was to cater for the domestic debt exchange program, to make commitment to it. By making commitment to it, you are spending. If anyone says you're not spending, I don't know where this economics is coming from. We have an IMF program. You went on a spending spree on the bond market. All of this, the government has made strong commitments to and activated the sinking fund you dissipated. Yet you say they are not commitment. I'm wondering what single policy it is that Dr. Kabiru and Dr. Bawumia understands, and one for a magic one to say that this is what the NDC government did as far as the stabilization of the Cedi is concerned. In any case, you look at all of this, what are the key variables to stabilizing the currency? They talk about the gold for oil program as though it was a novelty coming from them. In the wake, or in the run-up to, or post-COVID, when central banks in developing countries were trying to stabilize their reserves and get liquidity, that was the program they resorted to, having reserve-backed currencies, using gold. And if you went into this to say that you want to turn and pat yourselves at the back by saying that this is what you did, I think that, again, did not, because your central bank posted losses in a period where a bank uses the functionality of an instrument of moral suasion to determine that, and you had a governor saying that it amounted to nothing. Those were the whistles and bells of the economy. So these were the issues we had prior to. So we had a government that have inherited. We speak also as if we're speaking in a vacuum. We inherited an IMF program. The program has not even expired. There's no financial headroom to even do anything. So when you keep saying the government is not spending, when there is paper spending, when you go to, or a finance minister or head of the treasury goes to parliament to present a budget, the spending starts from there once the budget is approved. So when you and your boss say we are not spending, I don't know where that is actually coming from. The commitments that have been made, the appropriations that have been made, the disbursements that are yet to go is not spending. Come on, guys, what are we talking about? In any case, when your boss said he had locked the depreciation of the Cedi and given the keys to the IGP, why? What happened? When the economy was dissipated, you went to the IMF with your tails in between your legs. When you said you would never go and have an IMF program. You put us in this situation. Let's compare inflation rates at the time. And even at the time you started gold for oil program. And now. So if 2.6 billion was accumulated by a gold program through the gold board, you expect that to be used as a bullet payment to pay government debtors. Come on, Kabiru. Which government functions within that confines? So I think that it's about time we really unpack these real issues to have. Today, Dr. Bawumia has the convenience. I'm surprised he's not going to Cote d'Ivoire. He's quoting the Kwacha, who tells you that he gleans petrols around and then fix or pick low-hanging fruits. We have neighboring Nigeria. How is the Naira doing? That's our next door neighbor, where we have Lagos, bigger than the economy of Accra. Why won't he go to Nigeria and make a comparison? He's traveling all the way to Zambia to make a comparison. When it was not suiting, it was La Cote d'Ivoire. You can't go to La Cote d'Ivoire today because you think it don't favor the debate. So let's talk contextually. So with all of this happening, you found prudent spending. You found a precedent. And Bernard, there's something fundamental that has happened that we need to applaud this government. Quite often than not, the government treasury, which is a finance ministry, the central bank, and the executive arm of government, headed by the president, are always at loggerheads when it comes to stabilizing currency, right? Or having spending. This time around, three are all singing. Independent are singing from the same hymn book. Who tells you there's a coordinated effort? What single policy do you want again? You have a president, a central bank governor, and the head of treasury, which is the finance minister, singing from the same hymn book in terms of tightening budget. In any case, any prudent government, that is what is sought, which comes into office. The first budget, this is just a year's budget, fixed for a particular period of time, which is why I keep using the word photographic. So if you want to look at it and look at it as though it's a 4-year budget or an 8-year budget, you miss the debate. But look at the performance of it. Have you ever had this stability? It's changing by the minute basis. And look, your gold for oil program was parodic, right? It was emulated from what was happening in certain developing economies. This is a program, the Gold Board program, backed by legislation. So investors see more confidence in it because it is backed by legislation. It has a board, among other issues. So if all of this are happening, yet you are asking that what has been done, when has a single policy been an answer to an economic problem? That is faulty, again, to start with, to start calling for a single policy that a government has done. It's very faulty. So they're trying to mix the debate. But for me, what I keep saying is that we are even not celebrating this. You're organizing press conferences left, right, center, talking about it. We have a 4-year mandate to deliver on the economy. These are just protein signs of it. That we are casually mentioning and saying that, okay, whatever we are doing is yielding some fruits. We're not celebrating it. There's no Kenke party at the precincts of the Treasury or Finance Ministry.
So let me take a break. When I come back, I will deal with reserves. The president himself has attributed the rebound of the Cedi to the robust foreign exchange inflows and deliberate policy measures that have been put in place, right? So that's the president speaking. So we'll deal with the issue of reserves, but we'll also put some facts out because I think we have a responsibility as a media has also put out what we know. So for example, we know that the Cedi has strengthened not just against the dollar, but even much more so against the euro and the pound. We do know that some African currencies have not done that well against the dollar. And then we also have charts of the gold reserve position of the country for at least the past 2.5 years. I think it will be important to put some of those points out to allow the debate to be richer. And then we'll call Professor Bokpin to give us the verdict after 2 rounds of debate. This is a live edition of The Point of View. Let's know what you think. Who's convincing you so far? Is it even a debate worth having? Because as one of the professors is saying, we should even wait for the thing to lengthen a bit. So we'll be back with more. Stay with us.